We are covering these 7 top stocks with big percentage gains today. While watching bullish price actions, let us inform you our review on MRM. Medirom Healthcare Technologies Inc. is a company that's really standing out in Japan's health and wellness industry, combining traditional techniques with modern technology to offer a unique and holistic approach to well-being. They run a network of RA-ku relaxation salons across Japan, which are focused on helping people de-stress, manage pain, and improve overall health through massage therapy and muscle treatments. But what really sets Medirom apart is how it's bridging the gap between these hands-on services and the digital health movement. They've got smartphone apps that help users monitor and improve their health with personalized wellness plans, something that aligns perfectly with today's growing interest in preventative care. The massive 87% surge in Medirom's stock price today suggests that investors are starting to see the big picture. The company isn't just about offering a few services to ease stress. They're positioning themselves as a serious player in the wellness space by tapping into the digital health trend that's gaining steam worldwide. People are becoming more proactive about their health, and Medirom is at the forefront of that shift, with a business model that blends personal care with the power of data and technology. What's even more compelling is how Medirom is catering to a growing market that wants more than just treatment. They want to prevent health issues before they become a problem. The ability to track and manage one's health through apps is a huge draw, especially as more and more consumers are looking for ways to take control of their well-being. The fact that Medirom is offering a comprehensive, tech-enhanced wellness solution gives it a distinct edge over competitors who may still be relying on traditional models. And as the digital health space continues to evolve, Medirom is well-positioned to capitalize on that growth. The 87% jump in stock prices today reflects the market's recognition of this potential, especially with increasing demand for wellness solutions that offer more than just temporary relief. Medirom's long-term prospects look very strong as the company continues to integrate technology with health services. And today's jump could just be the beginning as investors realize the company's role in the future of health and wellness. This unique combination of physical treatments and digital health solutions not only speaks to current consumer trends, but sets Medirom up for expansion and continued growth in a rapidly evolving industry. Our review on PTIX. Protagenic Therapeutics Inc. is diving deep into one of the most pressing issues in mental health today: stress-related neuropsychiatric and mood disorders. This biotech company is focused on developing therapies to treat conditions like depression, anxiety, and PTSD, disorders that impact millions worldwide and can be notoriously hard to treat. Their lead compound, PT00114, is a synthetic version of a natural brain peptide called tenurin carboxy-terminal associated peptide, TCAP, which plays a crucial role in regulating stress responses in the body. Essentially, this compound works by targeting overactive stress systems in the brain, which are often the root cause of these disorders. It works by reducing cortisol levels, the stress hormone, to help individuals manage their stress better. The excitement surrounding Protagenic is clear from today's massive 84% stock jump. The market is clearly reacting to the potential of PT00114, which is a game changer in the way we might think about treating mental health. Unlike many other approaches that try to suppress symptoms, PT00114 aims to regulate the body's natural stress responses, which could mean longer-lasting effects with fewer side effects. It's still early days for the drug, but its unique mechanism, mimicking a natural signaling pathway in the brain, is what has investors buzzing. It's not often we see a treatment that targets the root of the problem rather than just the symptoms, which makes it stand out in the crowded mental health treatment space. Today's spike isn't just about the drug itself. It's also about the potential of this kind of innovation in mental health. With the mental health crisis only growing, finding effective treatments is more important than ever. There's been increasing investor interest in companies that are pushing the envelope in this space, and Protagenic's approach to tackling these disorders with a cutting-edge, natural peptide could be a major breakthrough. Looking at the big picture, it's easy to see why investors are so excited. If PT00114 can successfully move through clinical trials and prove its worth, it could be a huge win, not just for Protagenic, but for the mental health community as a whole. A therapy that addresses stress in such a novel way could fill a significant gap in treatment options for those suffering from these debilitating disorders. Today's stock surge is likely just the tip of the iceberg for what could be a long-term upward trend as more data comes out and investors continue to see the potential in this cutting-edge approach. Our review on OSRH. OSR Holdings Incorporated is really starting to make a name for itself in the global healthcare arena, with its focus on improving healthcare outcomes and the quality of life for people and their families around the world. The company is diving into some pretty innovative areas, developing oral immunotherapies to treat cancer, creating biologics to address age-related and degenerative diseases, and even leading the charge in neurovascular intervention medical devices, specifically in South Korea. With a footprint that spans the United States, Europe, and South Korea, OSR's ambition is clear. It wants to be a global leader in advancing transformative healthcare solutions. And today, investors are taking notice as OSR's stock soared 68% after announcing a major deal, an $80 million common stock purchase agreement with the White Lion GBM Innovation Fund. This deal gives OSR the option, though not the obligation, to sell up to $80 million in common stock to the Innovation Fund over time, providing them with crucial funding to accelerate their mission of advancing innovative therapies and improving patient outcomes worldwide. This isn't just any funding, it's a game changer. For a company like OSR, which is working on such a diverse array of therapies and medical devices, this capital injection is exactly what they need to bring their treatments to market faster and more efficiently. Whether it's their oral immunotherapies targeting cancer or the neurovascular devices that could change the landscape in South Korea, this kind of financial backing opens up new possibilities for growth and development. It means they can scale their operations and drive forward with clinical trials, product development, and eventually commercialization at an accelerated pace. For investors, this funding announcement signals that OSR is in a strong position to keep pushing ahead with its mission. The company now has the resources to fuel its innovation and address some of the most pressing unmet medical needs across the globe. That's why today's 68% jump is such a big deal. Investors see the potential for OSR to not only expand its global reach, but also make meaningful contributions to healthcare in ways that could truly impact patients' lives. With this kind of momentum, OSR is clearly poised for growth, and this funding agreement could be the catalyst that propels them forward even faster. It's an exciting time for both the company and its shareholders, and the future is looking bright. Our review on TCRT. Alaunos Therapeutics Inc. is a clinical-stage, oncology-focused cell therapy company, and right now, things are in a bit of a transition for the company. They're actively exploring a range of strategic options, everything from mergers, acquisitions, or asset sales to potentially entering into strategic partnerships or raising new capital. Essentially, they're looking for ways to accelerate their business and boost value for shareholders. Beyond that, they're also evaluating in-licensing opportunities, particularly in high-potential areas like oncology, obesity, and virology. Today, the stock is up a solid 50%, and it's not surprising given the context. Investors are likely reacting to the fact that Alaunos is moving forward with an action plan that could significantly alter the company's future. The idea of a merger or acquisition is particularly interesting because it could open up new avenues for growth, especially since the company is still in the early stages of development. If they bring on the right partners or secure new technologies through licensing, it could be a game changer for their oncology pipeline and potentially other therapeutic areas they're exploring. A 50% jump in stock price signals a positive outlook from investors, and understandably so. It's clear that the market is excited about what could come next, especially with Alaunos signaling they're making bold moves to strengthen their position. Whether it's securing a partnership with a larger player in oncology, acquiring new assets, or something else entirely, any strategic move has the potential to be a major catalyst for the company. So for now, it looks like investors are betting on the company's ability to capitalize on these opportunities, and that optimism is clearly reflected in the sharp price movement we're seeing today. In the world of biotech, especially in oncology, there's a huge appetite for new, innovative treatments. If Alaunos can leverage its strategic review process to tap into the right technologies or partnerships, we could be looking at a much more exciting future for the company. And right now, the market seems to agree, which is why we're seeing that notable surge in stock value. Our review on TIVC. Tivic Health Systems Incorporated is making some serious strides in healthcare, and investors are clearly paying attention. The company is diving deep into the world of bioelectronic and biologic therapies, targeting diseases linked to immune system issues and nervous system dysfunctions. What's unique about Tivic is their multi-pronged approach. They're not just focusing on one type of treatment. They combine bioelectronic products with biologic therapies, allowing them to tackle diseases in two different ways, through the body's neural pathways and its molecular mechanisms. This is a pretty innovative strategy that could put them ahead of the curve when it comes to treating complex diseases. Tivic's already got a product out there making a difference. ClearUP, a device designed to treat sinus pain and pressure, has been clinically proven to work. It's already available for purchase online and through commercial distributors, making it accessible for customers who are looking for relief. But what's really driving a lot of excitement right now, and why the stock is up 49% after hours, is the company's latest developments. The big news here is Tivic's work with entolimod, a late-stage treatment aimed at acute radiation syndrome, ARS. This is an area that doesn't get a ton of attention, but is absolutely crucial, especially in emergency situations where radiation exposure might occur. Tivic has secured worldwide exclusive rights to this treatment, which is huge for their future. Not only does this open up a whole new avenue of treatment, but it also positions Tivic as a leader in a niche market with serious potential. On top of that, Tivic has an exclusive option to license 5 more indications for entolimod and its derivative Entolasta. That means there are even more opportunities to expand the use of these treatments in the future. This kind of potential is exactly what investors are looking for, and it's easy to see why the stock is getting such a boost. What really stands out about Tivic is their pipeline. They've already got a proven product out there with ClearUP, and now with the licensing and development of entolimod, they're proving they're capable of driving forward with innovative therapies that target critical, underserved health issues. The combination of their existing product, their pipeline, and these new licensing agreements is setting them up for some pretty impressive growth. It's clear why the market's reacting so strongly today. Tivic's approach is innovative, and the potential of their pipeline and partnerships gives investors a lot to be excited about. With all these developments, it looks like Tivic Health is positioning itself as a serious player in the biopharmaceutical world, and today's 49% jump is just a glimpse of what could be a much bigger future. Our review on GNPX. Genprex Incorporated is a clinical stage gene therapy company that's gaining some serious traction lately, and today's 46% stock surge really has investors paying attention. The company is doing something pretty groundbreaking by focusing on gene therapies to treat major health conditions like cancer and diabetes, 2 areas where many patients are running out of treatment options. Their whole approach centers around delivering disease-fighting genes to patients, offering a potential game changer for people who are looking for alternatives to the traditional treatments that haven't worked well enough. The buzz around Genprex today is largely due to the progress in their oncology program, particularly with their lead product candidate, Recorsa Immunogene Therapy. This is a gene therapy treatment that's currently being tested in 3 clinical trials for non-small cell lung cancer, NSCLC, and small cell lung cancer, SCLC. What makes Recorsa so interesting is how it's delivered to the body. Genprex uses a non-viral delivery system called the Genprex delivery system, which encases the gene-expressing plasmids inside lipid nanoparticles. This non-viral method has the potential to make gene therapy more accessible and scalable compared to traditional viral-based gene delivery methods, which have had some limitations in the past. This method of delivering genes could be a huge leap forward, especially for lung cancer, where treatment options are already limited. If Recorsa shows success in these trials, it could be a major breakthrough for patients with these tough-to-treat cancers. But Genprex isn't just stopping at cancer treatment. They're also developing a preclinical diabetes candidate, GPX002, which aims to treat both type 1 and type 2 diabetes. This candidate also uses the same gene therapy delivery system, and if it works, it could revolutionize how we approach diabetes care, which is another area that could use some fresh innovation. So, why is the stock up 46% today? Investors are clearly excited because of the potential for Recorsa to make waves in cancer treatment and the possibility that GPX002 could do the same for diabetes. The progress they've made with their non-viral delivery system and the fact that they're addressing two massive healthcare needs is a big reason for optimism. It's still early days, of course, and there's a long road ahead with the clinical trials. But today's price jump signals a lot of faith in the company's strategy. If their gene therapies continue to show promise in trials, Genprex could find itself in a strong position to impact the treatment landscape in both oncology and diabetes. And considering how much of a difference they could make for patients, this could be a company to watch closely over the next year or so as the clinical data rolls in. Our review on APVO. Aptevo Therapeutics Inc., a clinical stage biotech company, is making moves in the immuno-oncology space, with a focus on developing bispecific immunotherapies for cancer. Their lead candidates, mipeltamig and ALG APV 527, are targeting aggressive cancers like acute myeloid leukemia, AML, and various solid tumors, respectively. Mipeltamig is undergoing clinical trials in combination with standard AML treatments, and ALG APV 527 is being tested for its potential to target a range of solid tumors. Today, Aptevo's stock saw a dramatic jump, up 46% by the end of the trading day after the company announced a significant financing deal. In short, they've entered into securities purchase agreements that will raise about $2.1 million in gross proceeds. This will come from the sale of just over 1.7 million shares of common stock at $1.19 per share, plus warrants to purchase even more shares down the line. These funds will help Aptevo continue advancing their clinical programs, including trials for their pipeline of promising therapies. Now, the stock actually saw an even bigger surge in pre-market trading, as much as 115% at one point, but those gains started to fade as the day went on. It's not unusual for stocks to swing dramatically on news like this, especially with biotech companies that are in clinical development stages. The announcement of the offering gives Aptevo some crucial cash to fund their ongoing trials, but it also dilutes existing shareholders a bit, which could explain the pullback after the initial spike. Still, the market is clearly excited about the potential for Aptevo's innovative cancer treatments, especially since their bispecific antibodies could be a big deal in the oncology space. The funds they've secured today will allow them to keep pushing forward with their clinical trials, and if any of their candidates continue to show promise, it could drive even more interest from investors down the road. It's a bit of a roller coaster ride for Aptevo, but this funding deal positions them to keep the momentum going in their mission to tackle tough cancers. Please subscribe, give the video a like, and watch more from our playlist. Thanks.